You've seen the headlines: Trump Media, GameStop, Meta Planet, and MicroStrategy, or rather, Michael Saylor, have poured millions, if not billions of dollars into Bitcoin over the past few months. But the thing is, if you look at the Bitcoin price, it's kind of been moving sideways. And yet, you would expect, for example, that with all that money flowing in, Bitcoin would surge to new record highs. But instead, Bitcoin has been stuck for weeks between $100,000 and $110,000 per Bitcoin. So, what's going on? If so much real money is coming in, why isn't the Bitcoin price skyrocketing? Is the market broken, or is there something else we're all missing? That's what I was wondering too, and that's what we're going to answer in this video today. So I started digging, and you're going to want to watch this entire video because I discovered 5 different reasons that together explain why the market is behaving the way it is. And that's also interesting for the future. Okay, before we get to the first reason, let's take a big step back. In the past few months, for example, MicroStrategy has bought almost 44,000 Bitcoin for over $4.5 billion. They now hold over 597,000 Bitcoin, which is about 2.8% of all existing Bitcoins. GameStop, which is still crazy, acquired 4,700 Bitcoin for over $500 million in their first treasury purchase. Meta Planet, which some consider the Japanese MicroStrategy, has bought another 8,000 Bitcoin since May and now owns over 13,000 Bitcoin. And then Trump Media also made huge headlines. They have announced plans to raise $2.5 billion to build a Bitcoin treasury, joining over 60 other publicly traded companies that invest in Bitcoin or have integrated Bitcoin into their balance sheets. So we're now talking about billions of dollars flowing into Bitcoin and buying Bitcoin. And these are not just rumors or speculation, these are real companies putting real money on the line. So with everything that's happening right now, you'd think that the Bitcoin price would be taking off, that Bitcoin would be skyrocketing, right? And on paper, this is exactly the kind of thing that should send the price to the moon. But markets aren't that simple anymore these days, especially the crypto space isn't as straightforward as it was 4 or 5 years ago. So let's break down what's really going on now. And believe me, there's a lot here that many people aren't talking about. First of all, for every huge corporate purchase, there are just as many Bitcoins being sold by old holders, whales, and Bitcoin miners. For example, in the first quarter of 2025, long-term holders sold over 240,000 Bitcoins, and that's more than what all these big companies bought combined. And the Bitcoin miners, they throw about 450 new Bitcoins onto the market every day, and at current prices, that's roughly $48 million of fresh supply per week. So while you're seeing all these positive headlines, there are a lot of people out there just waiting to sell into every price rally in Bitcoin to offload their old Bitcoins. And by doing so, they absorb this new demand before it can really move the price. But that's only part of the story of why the price is moving the way it is. Most of these large purchases by companies don't happen on regular crypto exchanges, on centralized exchanges. They don't just buy on Binance or Coinbase. No, they make private deals with special desks, OTC desks, that connect buyers and sellers directly. Sometimes it's thousands of Bitcoins at once. Why is that? Because it's cheaper, and this way they don't trigger big price movements. A $100 million purchase of Bitcoin can therefore leave hardly any trace on the price chart. And what does that mean for us now? It means there aren't huge green candles as many expect when these purchases happen because everything is already quietly settled off the exchange. So the price doesn't have to move, and in fact, most institutions like BlackRock and MicroStrategy buy Bitcoin these days through these private channels. Regular investors like you and me don't see any of this. We only see the headlines afterwards, for example, that MicroStrategy or BlackRock have bought more Bitcoin. But that's not all. If you want to store your Bitcoin and crypto offline, be sure to click the link in the description below the video because your Bitcoin and cryptos are not safe on centralized exchanges. But the question still remains, why isn't the Bitcoin price rising as much as it should despite these massive purchases? Because in 2021, it wasn't just the institutions driving the market. There was also a huge wave of regular people who bought Bitcoin and, of course, other cryptocurrencies out of fear of missing out. Millions of people bought at the same time, driving prices up and causing the order book to explode. And this emotional energy made the price skyrocket. But today, ordinary investors are barely active. Activity on the blockchain is lower than it has been in years. Google searches for Bitcoin and other cryptocurrencies are basically almost non-existent, and the big moves are currently happening in the stock markets, not in the crypto sector. That also makes sense because the general economic situation right now is not particularly good and is rather tense. But all of this should definitely make us pay attention, because when the time is right, the switch will be flipped, the price will be pushed up not by individual investors, but by the whales and so on. Then comes the fear of missing out. This fear is generated, and then all the individual investors come in, not wanting to miss out like in 2021, and they will buy through the exchanges, and that will drive the price up. And that's coming soon. But right now, for example, we have the US Central Bank, which is stubbornly sticking to its interest rates of 4.5%, and everyone is worried about a possible recession in the US, or the next global trade war, or some other conflict. And as long as people don't regain confidence and risk appetite doesn't return, retail investors won't chase the price. And in the meantime, if it's mainly institutions that are buying, the supply is simply absorbed in an orderly fashion. No rush, no panic, no fireworks. So the key point here is not just how much is being bought, but the speed and the emotions behind it. And when retail investors go crazy and start frantically hitting the buy button, the price can jump instantly by 10, 20, 30%. Think back to early 2021. The price shot up from $30,000 to $60,000 per Bitcoin in just a few months because people jumped in out of fear of missing out, wanted more and more, and the order books were overwhelmed. With corporate purchases, it's exactly the opposite. They buy slowly, deliberately, and patiently, often spread out over days, weeks, or even months. This way, sellers have all the time they need to prepare, and there's no bottleneck or panic. But that's not the whole story yet. But the question is, how many of these companies that are now building up their own Bitcoin reserves will sell or will have to sell in the future? What if these companies don't sell or don't have to sell? Michael Saylor from MicroStrategy won't sell but will continue to buy consistently. What if the Bitcoin price doesn't fall below a certain point? Michael Saylor is speculating on a new financial system with Bitcoin at the top.
Big banks to become the crypto custodians. We're going to need Wall Street to take a role, and we need to rationalize away from the 100,000 crypto tokens, yo-yo coins that people are manipulating towards Bitcoin. Bitcoin is an asset without an issuer. It is the one universally recognized protocol that's a commodity in the space. So when banks on Wall Street and responsible custodians are managing Bitcoin, and the industry takes its eyes off all the shiny little tokens that have distracted and destroyed shareholder value, I think the industry moves to the next level and we 10x from here.
MetaPlanet from Japan is following his example and keeps buying more and more Bitcoin. And there's another piece of the puzzle that most people overlook, the paper Bitcoin problem. When you hear about futures, derivatives, and ETFs, these are financial products that let you bet on the price of Bitcoin without actually buying real Bitcoin. And these are basically contracts or financial instruments. You never touch real Bitcoin. That's why I always tell you, buy Bitcoin and store your Bitcoin offline. You'll find the link for that in the description below the video. And if you want to achieve financial independence through Bitcoin and crypto, you'll also find the link for that in the description below the video. The important thing is that you take action. The problem is that nowadays, much more paper Bitcoin is traded than real Bitcoin on the crypto exchanges. So if a big player like MicroStrategy or BlackRock wants to bet against Bitcoin, for example, they don't even have to sell real Bitcoin. They can simply open a huge short position, which Michael Saylor isn't doing right now, and that alone creates a wave of artificial selling pressure. And now imagine the derivatives market for Bitcoin as a huge casino with over $35 billion in bets. And these bets can influence the real price of Bitcoin, because traders and bots are constantly making sure that the prices of paper Bitcoin and real Bitcoin don't drift too far apart. That's why a lot of activity in the derivatives market, like heavy short selling, can drag the price down even if a lot of people actually want to buy real Bitcoin. And that's also the reason why the price doesn't rise as much as you would expect, even though a lot of real money is flowing into the market and many people are buying Bitcoin. Because, the Bitcoin market is so huge today that even $1 billion purchase hardly makes a difference anymore. In the past, for example, in 2020, a purchase of $500 million could drive up the price of Bitcoin by 20% in just 1 week. But now, with a daily trading volume of over $30 billion, that's not even enough to get the price out of its sideways movement. There are simply too many funds, family offices, and large investors who hold tons of Bitcoin and can buy or sell at any time. So the question now is, what needs to happen for the Bitcoin price to really take off again? First, long-term holders need to stop selling so that new demand can actually push the price up. Then, buyers should enter the open market, not just conduct private OTC deals, meaning over the counter. And in addition, the economy needs to change. Lower interest rates and a weaker dollar would be perfect to get retail investors excited about taking risks again. Because once people start chasing the rising candles, the green candles, the omega candles, and start buying like crazy, that's when the real magic happens with prices, including for altcoins. But until then, things will probably stay quiet, and many will wonder why the big headlines aren't sending the price through the roof. And a lot of people just aren't interested in Bitcoin and other cryptocurrencies right now. By the way, if you're wondering why retail investor sentiment is so bad right now, even though Bitcoin is almost at a new all-time high, subscribe to the channel, because we'll be talking about that in one of the next videos. I hope you enjoyed it, and I wish you a great day. See you in the next video.